We are witnessing a dramatic shift in the financial markets as we speak. Gold, silver are breaking out. Gold is trading at an all-time high. But we have to figure out what changed in the macro landscape that now the precious metals are moving. The S&P 500 is retreating. The dollar is retreating ever so slightly, but it is having an impact, and bond yields are dropping as well. So what has changed? Was it just a speech by Jerome Powell and Jackson Hole, or is there more to it? And I've invited a fantastic guest to discuss. His name is Tom Hayes. He's the chairman of Great Hill Capital, also the publisher, the editor, the host of a fantastic podcast called Hedge Fund Tips. Go check it out on YouTube as well. We'll link to it below. And we'll try to make sense of what is going on in the markets. Are we looking at a dramatic shift in the markets, or is this just a blip on the radar screen and maybe just something more micro? Maybe just the precious metals. Maybe I'm too focused. Maybe I'm too much in my own bubble. So I'm curious what Tom has to say about that. Before I switch over to my guest, hit that like and subscribe button. It helps us out tremendously, and we much appreciate it. Did I mention it's free? I must have. So thanks so much for doing that. Now, everybody else. Tom, thank you so much for joining us. It's good to see you. I hope you had a great summer.
Thanks for having me, Kai. Yeah, we did have a great summer, and super happy to be here with you.
Yeah, really looking forward to catching up. A lot has happened. It feels like in the last 10 days. It seems like the floodgates have opened. I'm super busy on work-wise, but also the markets are reacting, responding. I don't think it's just the end of the summer. I think there's more to it. What is your assessment of the economy and the financial markets right now, Tom?
Well, I think, you referenced gold and silver. We don't spend a lot of time on that. We're equity managers, but I will say that Powell's acknowledgement of his dual mandate and the kind of cracks in the labor market and the recognition of those, and not being so systematically focused exclusively on 2% inflation was very, very positive. And then I think a little bit of what you're maybe seeing today was the after Friday headline about the tariffs may be voted illegal. President Trump has spent his career in court. He will litigate this to the end. He will appeal it until the cows come home, and the tariffs will ultimately go through. I think if I had to have a view on metals, I'd be less sanguine than the market is right now. I'd be more inclined to be focused on the unmagnificent 493, some of the left for dead parts of equity markets like small caps, some opportunities in international. I think that's where you're going to see doubles and triples and quadruples. I think to expect that in gold and silver from these levels is a bit ambitious.
No, it is. I don't see $9,000 in gold, for example, next week. And we'll get maybe to some sectors that are still undervalued, in your opinion, here in a second. But we do have to stay on the macro side for a second, because Fed Governor Chris Waller also brought up jumbo cuts last week. It was it was mentioned. Curious, what is your interpretation of a jumbo cut? Is it 50 basis points? Is it 100 basis points? And why? It seems like the market is reacting to it.
Well, we are going to know if we're getting a jumbo cut on Friday, because that's when we get the jobs report for August. That's what everyone's focused on. If that comes in a lot weaker, and with considering the revisions that we've gotten in recent reports, it's not out of the question that could come in weaker. Then 50 basis points is on the table. I think Trump has got Powell surrounded at this point. Powell has made the proactive shift, so he's not going to get caught sideways. He's done on his own volition to shift that talk. But when you look at Waller, when you look at Bowman, they're going to push through Miram before the September meeting. And Lisa Cook, the one thing that she's been missing in all of her "thou dost protesteth" has been, I'm innocent. She's been saying, you have no right to fire me. You're a bad man for firing me. But she's not said that I'm innocent. So if she's out, then, right now we're at the most dissenters in 3 decades. You add that to the fold, and effectively, a larger than 25 basis point cut could be a reality. But the data definitely has to support it. The data has supported a 25 basis points sequence for many, many months, when you consider how restrictive the Fed is in terms of being, 100, 150 basis points over the rate of inflation. They're going to move. The question is how much. My bet would be 2 to 3 25 bips cuts before the end of the year, more likely 2. But if that employment data is weak on Friday, everything's on the table.
Yeah. No, and that's exactly what everybody's looking for, I guess. But some sectors, and maybe coming back to gold, and we don't have to be, this doesn't have to be a gold discussion, but it's often that gold predicts stuff that's supposed to happen in the future. And now gold is rallying, hitting 3,500. Maybe it is pricing in a 2 rate cut already. Maybe it's pricing in negative data based on what you just said, like all the revisions that we've seen for like May, June as well. Why isn't the S&P 500 rallying if it expects, or if gold expects 500 or 50 basis points or a jumbo cut?
I haven't found gold to be a useful predictor of anything other than people's interest in buying gold. But leaving that aside, I would say copper is probably a better economic indicator than gold, although it's been less reliable in recent years. I think the number one predictor of expectations is earnings. Earnings are the name of the game. Markets don't go up by accident. Over time, they're a short-term voting machine based on emotions and headlines and expectations. In the long term, they're a weighing machine based on fundamentals. And the fact of the matter is, what we're seeing is kind of a divergence that people haven't quite dialed into yet. And that divergence is the Magnificent Seven that everyone is still crowded into. Slowly, a little bit of air coming out, has had aggressively decelerating earnings growth rates from 30+% to 33% a year ago to this quarter will be the first quarter where in aggregate the Mag 7 earns somewhere between high single digits to low double digits, call it 9 to 13% earnings growth for this quarter, while the unmagnificent 493, the left for dead stocks that people haven't been paying as much attention to, is now accelerating from negative earnings growth last year to 4, 5, 6%. And by a year from now, when Mag 7's at 10%, Unmagnificent 7 will be at 493. Why is that important? Because you're paying 33 times still for declining earnings growth, whereas you could pay 16, 17 times for accelerating earnings growth. And that's your arbitrage. If you want to make a lot of money in a reasonable amount of time over the next 1, 2, 3 years, skate to where the puck is going, not looking in the rearview mirror to where the puck has already been.
Yeah, no, it's interesting. Like you've been talking about Nvidia, and Nvidia put out solid earnings, although data center demand seemed to be down. I'm not an expert on Nvidia by any means, but it seems like growth is slowing a little bit. Although $3 to $4 trillion in investments into AI and to chip doesn't sound like it's nothing, right? How is that going to be split up? Let's discuss that. Like, what are the prospects of others? Because I want to talk about Intel with you as well. How's the $3 to $4 trillion being split up here?
Look, this was the first quarter's sequential negative growth in data center GPU. Okay, the compute part of data center, GPU compute that the AI dream is built upon, was actually negative sequentially. The category was positive sequentially because it was masked by networking, which no one cares about. It's not a useful indicator as for the anticipating the AI prospectively. I would say that doesn't make Nvidia a bad company. It doesn't make it a bad situation. What Nvidia suffers from is the same thing that AMD, ARM Holdings, all the rest of them, Broadcom. They are designers that rely on the kindness of strangers for their business to exist. And the kindness of strangers is singular, not plural. Right now it's called Taiwan Semiconductor. And you'll see the revenue growth on a sequential basis quarterly going back, a dozen quarters has been about $4 billion revenue growth per quarter. That's not because the demand stopped at 4 billion growth. It's because the supply stopped. Taiwan Semiconductor has limited Nvidia's allocation to 4 billion of growth. So the law of large numbers dictates when the denominator gets larger and you have the same revenue growth on the top line, your revenue growth declines considerably. And that's exactly what happened, down from 300, 400% revenue growth to on track for 50%, which, any other business would say this is the greatest thing that's ever happened to us. But when you're on that downward trajectory, that's a problem. So the dark horse in the AI game that no one's talking about is Intel. And Intel, the better Intel does, the better the government deal with the Intel does, the better it is for Nvidia, ARM Holdings, AMD, because their growth is limited by capacity, the ability to supply to meet the overwhelming demand that they have. And that 18A node in Arizona that is going to be completed, that they're going to be able to produce advanced chips on. And interestingly enough, right as the U.S. government was funding with the $9 billion plus the $2 billion grant, all of a sudden Masayoshi-san of SoftBank comes in and he says, "Oh, I want to put in $2 billion also because I believe Intel can play a major role in manufacturing advanced chips." So, here you've got one that's trading at liquidation value. If they liquidated Intel today and did nothing more, you'd get $22-23 a share. And if half of what they say is going to work, you wind up with 80, 100 or more per share. If they completely destroy the fab business, like, I don't know, I can't imagine how they could do it now with the government backstop, but let's just say that business goes away and they just focus on the legacy business. It's probably worth 40, 45 bucks. So, downside protected, upside unlimited. You got the biggest winner running the turnaround in Lip-Bu Tan. He came into Cadence Design Systems, his last company, when the stock was down 86%, familiar situation as it relates to Intel. And over the next 14 years, he turned the thing around. And if you had put $1 million in Cadence Design Systems when he became CEO, 14 years later, you had $68 million. So 68 bagger. This guy is no joke. He's a miracle worker, and he's going to do great things at Intel. Not a 68 bagger, but if you get a 3, 4, 5 bagger in a reasonable amount of time, it's something that you're not going to see per se in an Nvidia, which is trading at $4.5 trillion. So what are we going to have? A 5 bagger, and it's going to be 80% of the U.S. economy? Like, grow up. Like, let's do a little bit of math. Pull out the crayons. I could explain this. If our economy is 25 trillion, how much can Nvidia be? And my sixth grader will be like, probably not a whole lot more, maybe double, Dad. Maybe every 50 cents out of every dollar we're going to spend is on Nvidia, but I doubt it, Dad. We have to eat and food and clothe and shelter and all that stuff. But people don't think like that. They chase the shiny objects until the momentum runs out and the trapdoor opens and they say, what happened? They missed by 1% and the stock is down 50 and people can't understand why.
No. Well, have you seen the prices of the latest GPUs, the 50 series? It's insane. So it feels like half the economy if you have to spend half your household budget on a graphics card. But real quick on the topic of Intel, maybe there's a lesson to be learned here. Where did Intel go wrong? They were a powerhouse just a couple years ago, or maybe 4 years ago. I remember trying to buy parts for a computer that I've been building, and Intel was everywhere. They had the greatest gaming chip. Where did they take the wrong turn here?
Yeah, it's the normal entropy. They got big, fat, and happy, and they spent times in committee meetings, and they had all this middle management that passes paper back and forth to justify their existence versus innovating, staying competitive, staying hungry. It's complacency set in, and they got the others, their competitors ate their lunch. So the beauty is with Lip-Bu Tan, that culture has been gutted. He's been firing so many people and taking the fat out of the middle and focused on, writing tickets, actually doing business, actually innovating, actually staying competitive, actually being hungry. And, it starts from the top. There was a cancer at the top. It's been extricated. And now we've got a winner at the helm with unbelievable blue skies. And now they got the backstop. The existential risk is off the table with the implicit backstop of the U.S. government. And it is a national security decision, and it was the right decision. I'm not saying that Donald Trump should take equity stakes in Lockheed Martin. They're doing just fine. They don't need government money. But Intel did need that vote of confidence. The money is helpful to ensure that these nodes get completed and the advanced chip production can start in the United States. And once that happens, if you're a chip designer and you want to diversify your risk from Taiwan Semi, you're going to start putting chips into Intel. If you want an ear in Washington, you're probably going to start putting your orders through Intel. As long as Intel can deliver the quality, which they will, it's going to be off to the races because no one's even close. They're at the 10-yard line, and they almost got stopped right before the end zone. Instead, they got a little tailwind from the government to push them over the end zone. They're going to spike the football, and people are going to say, "What happened?" And you're going to have 5, 6, 7 bagger in Intel. And, Nvidia is not going to go up nearly as much from these levels, not because it's not a great business, not because there's an unbelievable demand, not because there's not going to be robots. There are. All those great things are going to happen. The question is how much of that is already priced into one stock versus the other stock. And as you know, Kai, Amazon.com was making bold promises in 2000. And all of the things that they promised came true and a lot more. The problem was people were already paying for those things to come true 15 years later, which did come true at the prices they were paying in 2000. So what did they have to endure over the next 2 years? Even as the fundamentals of the business continue to improve, a 90% drawdown. And I'm not calling for that at all on any of these Mag 7 stocks. I think they'll be fine. I just think they're going to do less well in the next couple of years than they have done in the last couple of years. That doesn't mean they won't do less well. I'll bet the fundamentals continue to improve. The question is, did the price get ahead of itself? And are there better ways, better returns for your dollar looking elsewhere before people start to look in those pockets that exist great opportunity?
Yeah, absolutely. No, it makes total sense. And you brought the meme of a tush push to my mind. So just pushing.
I
the
have no
quarterback
idea
over the
what
line.
that is.
Oh, you don't? Okay, it's
I'll
a football analogy.
it.
It's like Philadelphia Eagles are famous for it, where they place a couple players behind the quarterback and push them into the end zone.
Love it.
Because they got stopped short, and now the quarterback's being pushed in. But they're using his Tushy to push him in. So that's why it's the Tush push. So really interesting analogies here. But I understand where you're coming from on Intel. Maybe just one last, really short follow-up. It's just the topic of nationalization. And the government really stepping in. We've seen it in other sectors, MP Materials getting grants at least, or also direct investments from the government. What is your take on it? What is your opinion, your 2 cents on government stepping in?
Look, it's a national security issue. I mean, if in the event China took over Taiwan, which is not going to happen anytime soon, but if it did, Nvidia's out of business, AMD's out of business, ARM Holdings out of business, all the designers are out of business. They design everything, they produce nothing, and we're toast. And then China has all the chips they can put into weaponry, they can put into whatever they want, outcompete us all day long. So if we're not doing this, so this is like, I'm not saying we're at war, but if that were to happen, we're toast. So, if you look back to World War II, if you were a factory owner and you were producing furniture or, kitchen tables or cars or whatever, you know what? You retrofitted your factories and you started producing weapons, okay? Because we needed them for the war. So this is not like we're going to pick winners and losers. This is like we have no choice. Intel's the one at the 10-yard line. Let's give them the tush push, as you said, push them across the end zone, through the center there, get them up the middle, and get it done. And that's what we're talking about here. This is not like should we, shouldn't we? There's not a choice here. I mean, unless the government's going to start from scratch, it's going to take them 4 or 5 years to do where Intel is today, ready to go. They've made all the investment. I mean, look, Gelsinger, he's no Lip-Bhutan, but I will say he's probably not as bad as advertised. They let him do what he did. He was near the finish line. The price of the stock went down because the sell side couldn't wait 5 more minutes. So he got kicked to the curb. So it is what it is. Out of every negative comes a positive. The positive is Lip-Bhutan is a proven huge winner. Gelsinger, was a mentee of Andy Grove. So he knew his stuff, but Intel's now set up for great things. And it's not the government picking winners and losers, it's the government having no choice. And it is national security, and it is something they need to be involved in. And we as taxpayers, if we're going to give Intel something, $11 billion, why do we get nothing? Why do we get, because the government didn't plan ahead, they should get $11 billion of our dollars and we get nothing? No, we as the taxpayers are now going to get a 5-bagger. It's going to reduce our deficits. And again, this is opinion, not advice. Maybe we don't get a 5-bagger. Maybe we get a 2-bagger. Maybe we get a 10-bagger. I have no idea. But I think the upside is much greater than anyone is considering at the moment.
Perfect. No, Tom, appreciate that point of view here. And I just found my YouTube title, The Tush Push for Intel.
Yes, I love it. I love it.
Fantastic. But let's zoom back out again. Let's come back to the Fed cuts, because there's another topic I want to discuss with you, is the housing market in general, is big U.S. Economic impact or a factor in the U.S. economy. I feel like there's a false sense of hope a little bit in the housing market, and I'm curious what your take on that is, because the second we talk about a Fed rate cut, everybody talks about cheaper mortgage rates and maybe making housing affordable again. Do you agree with that statement? Like, what is your take on the housing market right now, Tom?
Unequivocally. There's this whole narrative, oh, we cut rates last year and mortgage rates went up, therefore the Fed fund rate has nothing to do with it. That's complete nonsense, because what you're going to see happen is something that you haven't seen in a long time, okay? People have a short memory. And what you're going to start to see happen once we get another 50 basis points, maybe 75 basis points, is something called option ARMs, okay, which are priced off of short rates. And what it is a teaser rate where they say for 7 years you pay interest only of, whatever it is, 100, 200 bips above Fed funds rate. So you could have, 5% interest only, 5.5% interest only for 7 years. If you're betting rates are going to go down further, that's a good thing. You can refinance it. If you're betting rates are going to go up higher, you're betting, well, I'm going to be out of the house anyway, c'est la vie. So that's the short end of the curve, affects the 5 and 7 year option arms. And that game has not even started yet. And with Bill Pulte at the helm, that they are going to bring that game back. That's number one. Number two, you have $35 trillion of home equity locked in people's houses. Okay. For anyone sleeping under a rock, just take a look and see what's happened to house prices over the last 4 years. People are stuck. They have high rates. They can't trade out of them, but they've got trillions of equity locked. And if you get rates down into the fives for HELOCs, for 30-year fixed mortgages, which we will, you are going to see the option arm game come back for people buying new homes. You're going to see the HELOC game come back for people who own homes. And that's going to be a massive stimulus in the U.S. economy that people cannot even comprehend that's going to take place. Lending standards are going to go down a little bit. Credit is going to expand. Household balance sheets are the healthiest they've been in decades. We got plenty of room for credit expansion and for an expansionary cycle. And then you take the 4 million home deficit, because we've underbuilt for the last decade and a half. You take the 72 million millennials age 34 who are trying to start families, family formation, housing formation, haven't been able to afford. And then you got over the weekend the possibility of Trump declaring a national emergency for housing. What does that mean? Is he going to take your house and give it to someone who can't afford a house? No, he's going to open up federal lands till the cows come home. And by the way, there's more than enough federal lands in actually metropolitan areas. People think it's only in super rural areas where you buy a new house and you get a free elk. That's not the case. The case is that we need 500,000 acres, and he can do that easily. Once he declares a federal emergency, he can automatically open up those lands, and that's going to create unbelievable opportunity for the home builders to do massive volumes and supply the unmet needs, and that fundamentally is not going to drive house prices up, as everyone thinks when rates come down, prices are going to go up more. It's actually going to drive house prices down, because number one, you're going to have increased supply. And number two, all the 60 and 70-year-olds living in 7-bedroom houses that and indoor pools that don't need that anymore, that want to downsize to a townhome just because they don't want to maintain it all, those are going to hit the market like nobody's business. So we're going to see a ton of supply of existing homes, a ton of supply of new homes once we get that 30-year fix below 6, and once the option arm game ticks up, and then a huge stimulus in the economy with the HELOC. And no one's really talking about option arms, and no one's talking about HELOCs, and no one's really talking about a 30-year fixed mortgage below 6%. Those three things are going to happen, I'm going to say, within the next 6 to 12 months. And you are not going to believe what happens to the housing industry, which, by the way, Trump talks about reshoring. Trump talks about manufacturing. One of the best things we manufacture in America when we get the policy right is houses. And it's 16% of GDP, creates a ton of high paying jobs. It creates all the type of jobs that Trump wants to see. And it's just getting started. So if you don't have now, would I play the home builders when the supply is going to be massively coming online and it's going to be a race to the bottom in incentives and price? No, I'd play the ARMs dealers, the building suppliers like Brad Jacobs, QXO, who just did their first acquisition. It's a roll-up of building supplies, of Beacon Roofing. He's going to be doing a lot of add-on, and he's one of the greatest wealth creators for shareholders, whether it was United Rentals, XPO, GXO, Waste Connections. He's done it over and over for shareholders, made them billions upon billions of dollars, and obviously made himself billions of dollars in the meantime. The ancillary plays like Stanley Black & Decker is a housing play. Generac is a housing play. Play what's going to benefit from massive new supply of homes, not the ones producing it, because they're going to be fighting on price and their margins are actually going to compress.
Could you clarify from maybe me personally, maybe some of the audience members, what's HELOC?
HELOC is a home equity line of credit. So let's say you borrowed $1 million on your house, and in 2019, pre-COVID, it was worth $1.5 million. Well, unless you live in a really not ideal area, your house is now worth $3 million. Okay, and if you live in California, it's probably worth $5 million. Okay, and you have all of that equity, the difference between what you owe and what the house is worth, trapped. Okay, it's phantom equity that was created because house prices went up due to some of the policies that were put in place during COVID. And so you say, well, I can sell the house, and if I sell the house for, let's call it $5 million, and I owe $1 million, I get $4 million of profits, right? I pay off the loan. Or you can borrow against it when rates become attractive. So if you can borrow against that $4 million of equity, maybe you don't have to move, and you take $2 million out at 5 or 6%, and now you can use that to start a business, to buy a car, to buy a boat, to spend as you like, because now you can access that without actually selling the house and moving. I mean, this is a big thing that we saw in the early 2000s. I think the governors and the rails on this will be a lot more stringent than they were in the early 2000s, so we don't wind up with another situation like that. But considering where household balance sheets are and the amount of untapped equity, this is going to be massively stimulatory for coming years as the Fed gets its policy normalized.
Fantastic, Tom. Really, really great insights. I have to end the conversation, I got a couple rapid fire questions for you. Just yes or no, or higher or lower usually is how we call the game. Probably should record a jingle or something for it. But but by the end of the year, let's go through it. S&P 500, higher or lower?
Incrementally higher. Probably a little bit of bumpiness in September and October, and resolves higher.
No, I should have started with the macro data, but macro data, inflation, higher or lower?
Potentially a short-term bump, and lower by the end of the year, and certainly into the first quarter next year, a lot lower.
Unemployment rate?
Higher.
Dollar, Dixie.
Counter trend bounce, lower over the trend. I can't tell you in the next 3 months, but I can say over the next 2 years, the dollar will be lower.
10-year yield?
We're going to see a 3 handle at some point in the next 6 months. I think it goes down to 375 at some point.
Fantastic. Tom, that's all we got time for. Really appreciate you joining us. Where can we send our audience to follow more of your work?
We're pretty TikTok famous at official hedge fund tips. Twitter or X at Hedge Fund Tips, or just go to hedgefundtips.com. You'll find the podcast, you'll find contact, and everything is there. And YouTube, just put in Hedge Fund Tips with Tom Hayes, and you'll find everything.
Fantastic, Tom. Really appreciate your time. It's great to catch up with you again, and let's do that again soon. Can't wait. Maybe before the end of the year, we'll do a catch-up episode just to recap the year and try to give a bit of an outlook of what we should be expecting in 2026. So thanks so much for joining us, and everybody else. Thanks so much for tuning in to Soar Financially. Phenomenal episode. We dove a little deeper on Intel because it's a topic we haven't discussed much here on Soar Financially, and also the national interest of the U.S. investing into Intel and what the ramifications might be, and where whether it was necessary. And Tom highlighted as well, it's an interesting investment opportunity. Curious if you think the same way. Let us know down below. And of course, many other factors weighing on the economy right now as well. Friday will be key. Non-farm payrolls report coming out, so we'll be watching that very closely while we're on the road. And in the meantime, don't forget to hit that like and subscribe button. It helps us out tremendously, helps with the nasty algorithm here on YouTube. So thanks so much for that, and we much appreciate you. Thank you so much. Take care.